The following is a presentation of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, "No, you're not an actor." His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Webner. Webner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, "I'm Rocky." No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow.
Couple months.
Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 4th, terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. So let's go look at one of our tools. This is the tool I call the Universal Quest. You know, happiness is not in the getting. Instead, happiness is in the becoming. And happiness is the Universal Quest. You know, happiness is being able to explore all that life offers. Happiness is found in having options, like doing what you want instead of what you have to do, living where you want or looking the way that you want. You know, when you're solving a problem, always make sure that you have at least 3 options. 3 options. That way you have a choice versus being in an ultimatum, which is only one option, or a dilemma where you only have 2, A or B out there. Happiness, folks, it is found in having options. Happiness is in receiving and sharing and reaping and bestowing. Happiness is found in taking time to enjoy what you've accomplished and giving yourself credit where credit is due and patting yourself on the back for a job well done. You know what? Happiness is the here and now. Happiness is not the end result. Happiness is part of the journey. Happiness, folks, is the road to heaven. The road to heaven. Therefore, happiness is really not, happiness is here today. For me, here it is. For me, I find happiness in being with you each and every morning. For me, what a great way to begin my day. What a great way to continue my journey. And for that, I say thank you to each of you out there. So let's go find some happiness in the markets. Right now, we've got the futures are up. Maybe that makes you happy. You've got the Dow futures up 68 points, S&P up 12. It's trading at 1744. NASDAQ futures up 22 points. They're trading out at 3452. Russell 2000 up about 8 points, trading out at 1098. King dollar up about 10 cents, trading out at 81.21. Goldilocks back $11 right now. It's trading at 12.48. Silver off 12 pennies, trading down at 19.28. Light sweet crude up 82 cents. It's trading at 97.24. Our call-in number is 877-927-6648. If it makes you happy, give me a call. We can take a look at your stock chart, answer whatever question I possibly can. A quick peek around the globe here. We see the DAX right now off 46 points. It's well off its session lows. It is down about 0.5%. The FTSE almost back to break even out there. It's down 8 points over in Asia last night. You had the Nikkei off 600 points, down 4%. Hang Seng was off 3%. It was off 637 points. So where do we begin? Well, let's go take a look at Goldilocks. That's in the lower right-hand portion of my screen. If you're watching us on Tiger TV, thanks so much for doing so. If you're listening on the radio or your mobile device at TFNN.mobi, don't forget you can always go to the homepage of TFNN.com. Upper right-hand side, you will see the button with 3 little smartphones. Click on that, and what you will be able to get is the live stream of the show, and you'll be taking a look at the gold chart. We're looking at the continuous contract here, the daily chart. You're familiar with it. If you've been watching us on Tiger TV, you're going to see the blue diagonal line. You're going to see a red diagonal line coming down, a descending line out there. The blue one is the trend. That's coming off of the swing point highs. That's using in the candles. That's using the wicks. That's using the upper extreme, the extreme emotion. Whereas the red line is really using co-located opens and closes. So you've got Goldilocks that has broken through a price channel. It's just struggling with this trend line out here. Right now it's traveling right into it. It did manage to hold that level yesterday. Today, right now, this morning here, it's pulling back inside there. What you don't want to see is you don't want to see gold get below, I don't know, let's call it 1230. 1230 would be the swing point from January 23rd out there. Right now it's traveling at 1248. Let's go check in on silver as well, see what silver is doing. You know, yesterday we showed that silver was forming, well, it looked like it was going to form a morning star, 3-candle, 3-river morning star pattern, but it didn't do that. It did manage to form a bullish engulfing candle, ran into resistance as it tried to break back above the June 28th high out at the level of 1963. So what we know about silver is this. Number one, it's trading in a sideways consolidation, about $2, we'll call it $2.50 at this stage here. We know that the bottom of the consolidation is really right around the $19, we'll call it $19 even out here. We know that silver, a couple of trading sessions ago, pulled back. This was on January 30th with about 43,000 contracts. That was pulling back into 28,000 contracts from December 31st. That always sets up the possibility of a test of that low from December 31st. That would be at 1872. If it breaks a consolidation, more likely it's a $2.50 move to the downside. That means if you get a close below, we'll call it that $19 area, that sets up a possible, 1650-ish type range out there. That says you get more than a test, quite frankly, of the June 28th lows out there. So we'll take things one day at a time, one moment at a time. The silver has not been able to break the trend line out here. This is a little blue diagonal line. Certainly has not been able to get out of its descending price channel out here. So silver right now is a weak link. As long as we're in the commodity sector, let's go finish it off. Let's go take a look at light sweet crude. Let's go see what it is doing. It's trading up just a bit this morning here. Right now up about, 64 cents. Trade out at 97.08. Making every attempt possible to try to make an A to B equals CD up is what it looks like here. You know, not much of a retracement as it made its move up off of the bottom. That was on January 9th. That was out at 91.24. Makes a run to a high on January 23rd at 97.84. The back off here, not too much. If we take a look at it, probably only about a 0.382 retracement out here. Let's go see. Yeah, 0.382 retracement. Johnny on the spot out there. 95.32 is your 0.382 retracement. It actually got to 95.21. So that's pretty nice. That sets up a potential powerful A to B equals CD up, just like we saw in the markets here. We saw that the retracement, the one-day wonder that took place, when was the last Thursday out there? was only a 0.382 retracement. That says we've got further to go to the downside in the markets. We're going to go take a look at that. But if the 0.382 retracement says further to go to the downside of the markets, in the case of light sweet crude here, it could be signaling a move higher. Now, in the case of light sweet crude, it didn't come off of that C point the way that the markets did. We'll switch over and we'll take a look at those. In fact, let's go take a look at the futures markets right now. Let's take a look at the daily charts and see what they are doing. Yes, you've got the Dow futures up 63 points, but let's start off. Let's see which pops up on our screen here first. Let's take a look at the Dow. So let's go see what the Dow actually has done. Now, one of the things that the Dow has done, very bearish, is it's moved back into the consolidation box. So on the futures contract, the top of the consolidation, we'll call it somewhere right around 15,626 or so. Right now, you're trading out at 15,352. You moved down yesterday with conviction, both in volume as well as in the actual candlestick itself. That candlestick is very, very, very strong. That is a strong candle to the downside. What the futures contract did is it got just below the 0.618 retracement off of the lows that were back in October of 2013. October 9th, specifically, 14,648 was the low. The high out here coming in, of course, on December 31st, on New Year's Eve, 16,540. So you've come into that area with a wide-ranging bar. And what you've also done, you can see off of the swing point here, from December the 16th, you've had an expansion. In this case here, it's been about 1.35 versus 1.272. So we've had a pretty good expansion. If we don't see any type of significant bounce today, what that sets up here is it really sets up a move down to the 1.618 expansion. Right now, in the sense, it's really sending that signal here. The 1.618 expansion also is the 0.786 retracement of that move off of the low from October 9th to December 31st high out there. So that would actually set up, as opposed to the pattern that we're showing here right now. Let's go ahead and delete this pattern. What that would actually be setting up in the market here, and this is how, even if you don't have the tool to go ahead and draw the butterflies and the Gartley patterns in here, you certainly can do. Most trading systems have the ability to go ahead and give you expansions of swing points out here. That is what your 1.618 butterfly buy pattern would look like out here. Something to think about. What else does that form? I sort of gave it away, didn't I? Because I said if you were going to come off of the lows from October 9th to the highs of December 31st, right in that 15,053-ish range happens to be your 0.786 retracement. So not only would we be forming a butterfly buy pattern, we would also be forming, or the chart pattern would also be forming a 0.786 Gartley buy pattern. What would that look like? That would look like this. Let's go color that one in. Maybe this time here we'll go ahead and try to use a yellow color out here. Let's see if I can use yellow. I can use yellow. There we go. I get some yellow. Now, you're only seeing the one portion of the leg. Let's get rid of the butterfly out here. That way you can see this on the screen here. When I control low, get rid of this one right there. Delete that. So there is... Oh, I got rid of the wrong... No, there we go. There's your 0.786 butterfly pattern. So you got two patterns, two beautiful patterns that converge right in that 15,053. You're at 15,350. It's another 300 points down, folks. And that is a possibility. 877-927-6648. We'll be right back.
Yeah, it's always better when we're together.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. You know, we were taking a look at the Dow futures contract. We were looking at the daily chart out here. During the break, I went ahead and shifted over to the 120-minute chart. So if you're watching and you're following along with us, we've got the 120-minute chart for the Dow futures on my screen. This has got the Rhodes Momentum Indicator and strategy system on it. As we can see here along the bottom, he formed a little, let me actually get my crosshair out there. That'll make it a little bit easier. So at about, 5:15 yesterday evening, formed a little doji candle out there. You haven't really had any kind of bullish signal. Now, I do expect we're going to see some type of a bounce. We'll have to just see what type of bounce that moves into. Why do I say that? Because yesterday we had a VIX index of 16.46% out there, one-day rate of change of 16.46%. Within 48 hours, we ought to see some kind of a bounce attempt. Now, futures are up right now, and that can qualify as the bounce attempt out here. In order for the rally to get any kind of legs out here, the Dow futures are going to have to close above 15,387. Let's just call it 15,390, 395, something like that. And so that's really what we are looking at inside of the Dow. Let's go switch over and take a look at the let's go take a look at the other futures contracts. Let's go take a look at the strength. Let's go see what we can find from strength here. That would be the NASDAQ futures. Now, as we take a look at the NASDAQ futures, if you're following along with us here on Tiger TV, if you take a look at coming off of that same October 9th bottom, okay, we're using the Dow, we're using the October 9th swing point low. That's where we were able to identify the 0.786 Gartley buy pattern that would potentially be forming out here. Now, what we can see here in the NASDAQ futures is that the price move down yesterday made the 0.382 retracement. Shows you just how much stronger the NASDAQ is versus the Dow, right? Because the Dow futures are down below the 0.618 area. That's what really brings into play that's what really brings into play that 0.786 retracement. Now, what also occurred out here is we've got the convergence of really three of our Fibonacci retracement numbers coming off of swing points out here. You've got the swing point session here from November the 8th. That's at a low of 33.10. Well, if you go from that low to the high inside the NASDAQ futures on January 23rd, that's made a 0.618 retracement. We've also got another swing point that took place out here November 21st. November 21st, the low out there was 33.60. So if you go from that low to the high again at, January 23rd out at 36.35 out there, you're going to beat a 0.786 retracement. And then what else do we have? We have a 100% move. We're very, very close to it, and that's the low from December 18th. Interestingly enough, the NASDAQ futures did not pierce that low. They did not test that low. They came into that low with volume. That had 241,000 contracts. That's 34.15. We came into it, or the NASDAQ futures came into it with 326,000 contracts yesterday. Only got to 34.25. That was 34.25. That was 10 points away versus 34.15. Unfortunately, you don't have a test. Now, what we also can see here, you can see a 1.5 versus a 1.618 or 1.272 expansion of swing points. That's the January 13th low up to the high out here. So from a retracement standpoint, from a support standpoint, you should have some pretty strong support where the NASDAQ, in essence, stopped yesterday. So now let's go back. Let's go take a look and see at the 120-minute chart here for the NASDAQ has, just like we were taking a look at the Dow. So we know what weekends need to do. Weekends need to show us that it wants to get above the 15,390 level. If it gets above 15,390, it depends on what type of style of trading that you do. If you're somewhat of an intraday trader and you were short the Dow, you might want to really tighten up that stop. But that's a close above it. It's a 120-minute chart that we're looking at. Now we're going to switch over. We're going to take a look at the NASDAQ futures. We're going to look at those on the same 120-minute chart out here. And NASDAQ needs to get just a tad higher, about 34.55, 34.54. Really, what the NASDAQ futures, if they can get above and close above this candle session from 2 o'clock in the afternoon, that was yesterday, that high out there is 34.6750. So you are at right now, you're at 34.52. So you've got another 34.67, another 15 points out there. That would be big. That would actually be telling us that you could see a really significant rally in the marketplace. Otherwise, right now, NASDAQ futures have just simply run into some resistance out here, and that's the 120-minute chart that we're looking at on the NASDAQ futures. A quick peek in at the ES Mini on that same 120-minute chart time frame, using the same patterns out here. That tells us that right now, the ES Mini is trading into resistance at about 1746 or so. 877-927-6648.
Well, it's always better when we're together. Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow up 51 points, trading out at 15,424. S&P up 9, trading at 1751. Composite up 24 points, trading at 4,021. Russell 2,000 up 6 points, trading out at 1101. Even Steven, you got the Apple's up $3.60. Microsoft up 55 cents. I believe they named a new CEO, Satya Nadella, I think, named as the CEO for Microsoft. So having a positive result, up about 1.5% as we speak right now. Google's up $6. Cisco down 10 pennies. Intel off 2 cents, leading the charge to the upside. Leading the charge, the upside, Furix Pharmaceuticals. Boy, this is a little rocket ship right now. It is up $67. It's trading out at $114 or so. FURX, we'll go take a look at that. Out with some type of positive results, top-line results on a Phase 3 clinical trial for Eluxadimab. Valdoline out there, I believe, and I'm sure I butchered the name of that drug out there. You got Michael Kors. They were out with numbers before the bell. They are trading up 20% this morning, up $15 and change. We'll go check in on them as well. Net income at $229 million versus $130. That's a pretty hefty beat out there. That's almost a doubling, close to 100% increase in net income. Let's go check on their revenues here. Let me see what their revenues are. Can I find their revenues? Looks like they did about $3.1 billion, but that was a revenue increase of 59%. So $1 billion versus $636 million from last year. Not too shabby out there. Fossil, FOSL is the ticker symbol. They too are up this morning here, up 9%. I don't see a earnings report based around that. You've got Atmi Inc. ATMI. That's trading up 25% this morning. They're out with numbers. They generated, from continuing operations, they did 94.8 versus 89.2 million out there. So that was their top line. They're being acquired. That's the deal here. There we go. Okay, that's what's pushing this thing up 25%. They're going to be acquired by where did it go? Q4 at top estimates. Oh, maybe they're not going to be required. Maybe they're not. Maybe I was looking at something else. My apology out there. In any event, you've got Lumber Liquidators. LL is the ticker symbol. That is up 7% this morning, up $6. Let's see. Were they out with numbers out here? I don't show their numbers. You got Yum Brands, YUM, up 8% this morning. Biogen, BIIB, the equity that just won't stop. It's up $5 this morning here. To the downside, ARM Holdings, ARMH. It's trading off 8.5%, down $3.90 out here. They did produce their results, but I don't see what those numbers are on my screen out here. You've got you've got LinkedIn, LNKD. That is down 1%, down $2. Netflix off $2.63. Northrop Grumman, NOC is the ticker symbol. They're off $2.90. Eaton Corp, ETN down $2. Brown and Brown off a couple of dollars. Our call number is 877-927-6648. Let's go check out some of these stocks here that are popping and dropping out here on these. Let's take a look at. We'll go back and forth here. Let's take a look at Furix, and not to be confused with Jim Furyk. FURX is the ticker symbol, up 135% this morning. Well, shoot, forget this. We're not gonna. This did have a nice little breakout back here. This was this breakout all the way back here. This equity back on January 25th, so a year ago, a little over a year ago. January 25th was trading at about $20. Gaps up with a nice sign of strength out there. No idea what was behind that, but moved up to $30. That gap is still open down there, but maybe there was some type, again, it's a drug entity. In this case here, it's just off to the moon. I mean, talk about being off to the moon. $105 out here. Now, it's trading off of its highs. And quite frankly, if you were in yesterday in this equity here, which only trades about 100,000 shares a day, it closed out at about $46. So, that's a nice 2.5 bagger out there. No reason to not go ahead and take some bread off of the table. So that is a stock. Maybe looks a little bit like Sarepta Therapeutics out there. Do I have that on the screen? Nah, I don't have that on the screen. That's probably on a different screen. But let's go take a look, because that's to the upside. That's the leader in the clubhouse here. To the downside, we've got Dun & Bradstreet now. They've jumped in front here. DNB is the ticker symbol. They were out with numbers. They generated, let's see here, revenues of $476 million versus $463 out there. So let's go take a look at Dun & Bradstreet. It's been a while since I have looked at that chart out here. DNB is the ticker symbol. So they are, this can't be, there we go. Is that right? Wow. Looks like they may have traded up and then just really traded down this morning. Is that, boy, it looks awfully suspicious to me out here, but it could, but let me go to an intraday chart here, just see if 114 is the high here today. If not, my computer would be doing something fishy, and we won't be paying attention to the Dun & Bradstreet chart out here. Don't know what the issue is. So I'm going to go to a caller. Let's go to Chris in Tarpon Springs. Chris, thanks for calling. Thanks for holding. How are you this morning?
Oh, I'm doing great, Steve. How are you?
I'm doing excellent. Thanks so much for asking. You want to take a look at the QQQ Tell me what
Yes.
you're doing out here and how I can best help you.
Okay, I'm not doing anything, and I want to tell you, Steve, I'm a subscriber to your newsletter, and it's fantastic. And looking at it today, I had a question.
Yes.
The Qs potentially took out a swing point from the 29th yesterday with some volume, and my question is on ABCs, in this case, an ABC down. After it takes out a swing point, how often does it just make the straight line move to complete the ABC, and how often would it potentially bounce back into that swing point?
You know, Chris, yeah, first, thanks for the compliment. I appreciate it very much. So thank you there. To give you a percentage as to whether just at that stage makes the straight line move down, I don't have any kind of testing results to be able to tell you that. I think that there are, always maybe some other factors that are in the that have to factor into it. Other factors that factors. Boy, that's just really great grammar, isn't it?
Yeah.
Nonetheless, you're going to have to cut me some slack there. And one of those factors, today being that we had a VIX that had a one-day rate of change in excess of 10%. And the studies show there that since the 2011 bottoms, that when you have a one-day rate of change in excess of 10%, within 48 hours, you're going to see some type of a bounce. And that bounce could be today, could be tomorrow, so you're going to have, and it may have already occurred in the futures market out here as we speak right now. So that is one thing that has to be taken into consideration. So, for example, in the Qs here, if the Qs yesterday had moved lower, and we didn't have that one-day rate of change in excess of 10%, then your odds are going to favor that it's going to continue that straight line move down. Now, with the Qs here, what's interesting about the Qs here, Chris, is that a couple of different things. Number one, if you've read The Art of Timing the Trade charts out here, what the Qs would really be signaling to us is as they were making the A to B move, which was down to the January 29th low. In the Art of Timing the Trade charts, the way that Tom takes a look at A to B equals CD patterns, it's different than the way that Larry and I do when we're using Ensign windows and we're taking a look at the lightning bolt pattern. The Qs really didn't fall into that A to B equals CD, and the reason is because we had that big, huge day last week on Thursday, on January 30th out there, with a move of 66 million shares to the upside. A real sign of strength. That's why it's been a little bit difficult to navigate this market, because the Qs, the strong hands, were saying, you know what, I'm not an A to B equals CD down, and instead it wanted to bounce higher out there. Clearly that didn't take place, and it just shows us how weak the market is versus 100 stocks, inside of the NDX, which is weighted as well. So now you've got, if you take a look at the NDX 100, I don't recall the exact number of stocks that equal greater than 50%, but it's probably, I'm going to guess, around 20 or so make up more than 100% of the weighting structure inside there. So am I starting to help maybe answer any questions, or I'm creating more questions for you? Let me take a quick pause here to ask you that.
No, Steve, I think I'm getting this sense that what you're saying is there could be a bounce, and probably if I was going to short an index, this one, or an ETF, this probably isn't the one to do at this point.
Absolutely. No. Yeah, it's not. You would want to, if you're going to short anything and you were going to try to, use a tight stop and use kind of a trend-based type trade out there and take some attacks, I would stick with the Dow. I would stick with the diamonds, and I think that might be the SDOW is a 300%. I'm sure there's a 200% move out there, but that one is the weakest. See, if we switch over, we take a look at the diamonds. So in the case of the Qs, what the Qs also did here last night, or yesterday, was they got to a low of $84.07. And the actual low of that December 18th there was $84.05, 2 pennies. Now, ordinarily, what the Qs would have done is they would have jumped that swing point this morning, because they stopped right before a swing point, coming into it with the volume, and they didn't do that. So that has to make me kind of pause for a moment as well and say, okay, this little bounce could actually be working its way through the market. Now, all the other 3 ETFs out there, they do have confirmed A to B equals CD down patterns. And the diamonds, we'll take a look at, well, the diamonds really don't have a... Here's the deal with the diamonds, Chris, is that there wasn't any real retracement there wasn't enough of retracement. You at least like to see a dead cat bounce retracement of 0.382 retracement. And inside of the Dow Diamonds, if you go from the swing point high of January 21st down to the low on January 29th, it really on its bounce should have been able to get up to 159.92. It becomes difficult for me to draw an A to B equals CD down pattern when it hasn't even done the, what I'll call the prerequisite 0.382 retracement out there. So the diamonds, the pattern that they really have coming at us is much like we were looking at in the futures contract, in that they were coming into this 0.618 retracement level, which was at 154.05, doing it with a wide-ranging bar, doing it with accelerated volume, and they closed below that 0.618 level, and they're trading inside that old consolidation zone. So that says the 0.786 level is in play. Here's where I caution you or anybody else on trying to jump on board the short train here just yet, and that is that this market is in the extreme. If you take a look at the diamonds, the weak link out here, it certainly is in the extreme oversold condition. So if you're going to try a short play, the diamonds I think is a place to go because it's the weakest, but just have a tight stop in place. Like I would do if I were trading it today, I would not have a stop. I would have a stop above, if it gets above 153.99, today's high. You kind of like have to fire away at it. But I think you have to be careful because each of these ETFs really need to work off some of the oversold conditions that they have out there. Doesn't mean, and especially in a bear market, an oversold condition, things can most certainly continue to move lower. Now, the SPYs here, the SPYs absolutely do have an A to B equals CD down. And the reason is because they came on that bounce that it had on January 30th. It was up with 118 million, whereas it was down with 180 million. As it was making, in essence, its B point. Actually, the January 29th move down was with 219 million. So that's where you're down on volume, up with light volume, and they do have an A to B equals CD down, and that says that it wants to get to probably about the 171-ish type level out there. So is that how, I want to be...
Excellent. That's excellent, Steve.
Okay. Well, I hope, hey, good luck out there, and just if you're going to trade this as a momentum move, just keep your stops relatively tight.
Good advice. Thanks. Have a good day, Steve.
Alrighty, and you bet. Thanks so much for calling. So I was taking a look at the SPYs folk out there, and really a great question with regard to A to B equals CD down patterns that are out there. And so we've covered the SPYs for you, the IWM, and it looks like we've covered the diamonds. Right now we've got the Dow is off about 2.5 points. The S&P is up 4. Composites up 10. Russell 2000 up 4 points as well. Let's continue to check in on some of these stocks here that are moving and grooving out here. Let's take a look at. We were trying to take a look at Dun & Bradstreet. No, that looks like something doesn't look right there. So we're not gonna worry about Dun & Bradstreet. Hey, we've got others to choose from. Let's go take a look at LinkedIn. LinkedIn is off at $3.86, so not a big deal here this morning. But let's go see what this stock is doing. LNKD is the ticker symbol. So it gapped down. No, it didn't gap down. It is just simply down here this morning. It looks like LinkedIn maybe wants to make a run here. Well, it's trading into its close to its 50. Is that a 50-day? Give me a moment here. Give me a moment here to put this up on the screen. I don't think it's a 50-day out there. Let's go see where that 50-day moving average is on this here. It's trading below the 50-day. Maybe it's trading into the 200-day exponential moving average. Let me do that again. Yeah, it's trading into the 200-day exponential moving average. So it's going to try to find some support out here. This is LinkedIn LNKD, right around the level of about 207.57. It's trading out at 211.62 right now. So far, volume on this, 274,000 shares. It's got a swing point low for 3.7 million. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's up 47 points right now. S&P is up 8, trading out at 1750. I know I've got a couple of clients that trade the Aussie U.S. dollar currency pair out here, and I just happened to flip over to the currency page. So let's check out the currencies. Formed a nice... This is a daily chart we're looking at here for the Aussie dollar. Now, if you're watching this on TigerTV, you can see this little downtrend channel that price has been traveling in ever since it made its highs back out here in August of 2011. And the price has been contained within this price channel pretty well. Now, if you come off of the swing point low here, right around May of 2010, looks like right around 81 cents or so, you go from that low all the way to the high back around the July 2011 timeframe. Looks like somewhere around the 110 area. What it's made is a .786 retracement. It's made the A to B equal CD down. It's done so. by coming back also to the bottom of this descending price channel out here. Let's go see what kind of retracement off of its lows all the way back here in 2008, down at around 63 cents or so, up to the highs out there. We're going to find out, well, it hasn't made the 0.618 retracement, or have you, but you do have a nice 0.786 on a daily chart, Gartley buy pattern. And today we're seeing quite a nice wide-ranging bar off of that descending price channel out there. Now, what it also has here, which is interesting, it also has a price relative strength divergent pattern. Notice how, if we take a look at this, if we take the, come on, work with me line here. If we take the low here, December 19th, you make a swing point. You do it with at about 88 cents out here, and you make a lower low out here. I'm going to go ahead and make that line. We'll make it nice and thick for you so you can follow along. So there's your lower low that's being made inside the market. But if we go all the way back here to when that low was being formed, this was back, looks like I grabbed the wrong swing point. Sorry about that. But on December 18th, you can see the RSI, the 14 period, it was at 27.65 out there. And as it made that little lower low in price, which was on January 24th, you were at 32.11 on that 14 period relative strength index out there. So there you've got a little price relative strength divergent pattern. That is one that you like to see. This one here, on you'd have to really stitch the candles together, two candles together out here, and that would be January 27th as well as January 28th in order to get any kind of bullish configuration. But you're certainly getting some follow through here right now. So it's setting up its first small A to B equals CD up pattern here, and that is, and it's doing it with a nice wide-ranging bar. So it says that the Aussie dollar versus the U.S. dollar ought to make the probably the 1 to 2 A to B equals CD. Ought to come back and test out the swing point here from January 13th. Looks like that's where it's headed to before it makes its next retracement or move down inside of the market. If we go take a look at the Queen, let's go see what the Euro-U.S. dollar is doing out here. Let's take a look at this. You can see the Queen here has broken through that little vortex, that little cone that it has been forming out here. So that says that the euro maybe wants to go ahead and pull all the way back to about the 133-ish level. Its next swing point low is at 1.3294, and that was from November the 8th out here. You're trading inside it right now, so that says to me that that is where the euro would like to head to. So right now you got the Dow is up 71 points, S&P is up 11, NASDAQ is up 28 points. So the bounce that that the one-day rate of change that the VIX shows is certainly underway as we speak here. So stay tuned if you can. We'll go check out volumes in the ETF structures. We'll take a look at resistance areas. And if you're off to start your Tuesday, thank you so much for joining me this morning, and I'll look forward to seeing you tomorrow. Have a great day, folks.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.